Hi students, my name is Gary Fickard. I'm the Director of Trading here at Market Traders, and what I want to speak to you about today is the pound prediction. I know that there's been a lot of talk about the pound and how the pound's going to move. I'm really excited about showing you what I think the pound's going to do in the next couple of weeks. Now let's take a look at my chart right here. I'm going to go ahead and talk about the pound Canadian chart first. And we look at the weekly. I've broken the chart into two different charts. The weekly chart, as you can see on the left-hand side, and then of course the 4 hour on the right-hand side. What I'm looking at on the pound CAD is I'm looking at the weekly time frame to give me some sort of direction as to where the market is going to go. We can see that we've had a lot of support coming off at this level around about 1.60, and we had this big bullish candle right about here. Now, with that big bullish candle forming right here, we've had a retest of that candle, or at least a candle formation, and now I'm anticipating some further rally. So, although we've seen the pound possibly going further down south in the long term, in the short term right now, I'm thinking at least a relief rally that's going to take place towards around about 172. So, we're looking for some upside move to 172 on the pound. And then, all right, then the pound CAD is going to be bearish. So long term, I'm still thinking bearish on pound CAD. But in the short term, let's go ahead and start thinking about some upside move on pound CAD. Now, that's on the pound CAD. We've got a couple of more pairs we want to look at. The next pair I want to look at is the pound New Zealand dollar. Now, before I do that, I want to show you on, I do a lot of target trading as well, which is based on pivot points. Take a look over here on the pound CAD. And look at the daily chart and see how these targets right here have not been hit. So we've not hit the pivot point for this year on the pound CAD. What does that mean? That means that there's a possible upside rally expected before the market starts moving back down south. So we are definitely in a bearish environment, but we do see some upside rally that could potentially take this pair to around about 172 at least in the short term. All right, so that's that in the short term for the pound CAD. Let's move on to the next currency pair. And I'll be honest with you, I hate this pair, but it's really setting up nicely for also a potential rally. If you take a look over here on the weekly time frame, once again, using the weekly for direction, I'm expecting a rally to the backside of this break of this trend line right here. Then I'm expecting some further downside move. Now, let's deal with one thing at a time. Let's think about what this rally could potentially give us. If at the moment right now, I've already indicated a lot of traders to start buying here at 170 and start looking for a rally to 183.68. So that's a potential, let's go ahead and do just a quick calculation from the entry point here. That's potentially 1,300 pips to the upside. Now, once we get to that point, again, like I said, let's deal with one thing at a time. But once we get to that point, we could possibly see some further rally to the upside. But let's deal with just one situation at a time. And that situation is, let's find buying opportunities to 183.68. And then at that point, we'll see how the market conditions are. If it offers bearish opportunity, we'll take that. But let's ride the wave going up for right now. Now, if I go to the target trading, again, I use target trading to really identify whether we're in a bullish or bearish environment. And if I look at the chart right here, now we're looking at the pound New Zealand dollar right here. And if you look over here at these purple lines, notice that the market has not got to this yearly target right here. What does that mean? That means potential upside move. The market tends to gravitate towards these levels of support and resistance. And these are pivot points that are acting as support and resistance. Very interesting upside move, potential upside move for the pound and New Zealand dollar in the next couple of weeks.
2, 1.
All right, traders, so let's take a look now at the pound JPY. This is the chart right here. Now remember, we've got the weekly time frame and then we've got the 4 hour time frame. What I'm looking for on the weekly time frame is you look over here, take a look at this, and I'm going to zoom in on this chart. Notice the indecision candle that we had last week. Now, this week hasn't been very active as well. We've been a very quiet week this week as well. But what we're potentially looking for, traders, is this right here. On the 4 hour time frame, do you notice that we could see a downside move first before the rally? And this comes from this big bullish crown that we have right here. we still see that the market could dip down and possibly down to around about 133 and then turn around to the upside. So on the pound JPY, although we're expecting some weaker JPY, and weaker JPY should rally the pound JPY, because we're expecting some weaker JPY, at the moment right now, it's not ready for that weakness. We've seen pound weakness across the board, and the reason why we've seen some pound weakness across the board is we've just had some retail numbers come out this morning, and the retail numbers came out weaker than expected. So we should see most of the pound crosses bearish for the next couple of days moving into next week. But then eventually towards the end of the week, maybe towards the following week, we start seeing some rally, especially the pound JPY. So on the pound JPY, my approach on this would be expect some bearish movement on the pound JPY towards around 133, then look for a rally to the upside towards about I got it labeled here as 163. You see 163.92, although we got a 1.618 at this point at 162.90. So let's call it 163 just because we're friends, all right? So 163 is good, and that is the level that we're anticipating. Now, again, target trading helps me identify whether we're in a bullish or bearish environment. Take a look here on this chart right here. This is the pound JPY. Once again, take a look at the yearly target. The yearly target's telling us that we have a target that has not been hit this year. What does that potentially mean? It means some upside rally that could potentially take this market to that level. And the price on that is, let's take a look at the price. The price is at 148.08. Now, could we get to that level? Absolutely, because I've already shown you on the 4-hour time frame that we're looking for an upside move to 162, 163. So yes, that target there at 148 should be a no-brainer. We should be able to get that with ease. All right, and finally, the last currency pair, which is the Aussie, the pound Aussie right here. All right. Once again, traders, very important that you realize that we're focusing more on the short term right now. On the short term, we're looking at, and take a look here. I always like to look at the weekly. We see a lot of indecision here on the weekly, but I still see some possible downside move to around about this level. And the reason why, if you look at this big pattern, got a big, you can see a big pattern right here, and it's a godly pattern, which means that the market may come back down to this level right here and then start its upside rally. Now, if I go to the 4-hour time frame, I look at the 4-hour, the 4-hour is real range bound. And why I say it's range bound is because we may potentially see the market take out this low. And then when it takes out the low, just like you see with these black lines that I've drew in here, this is what I'm potentially thinking the market's going to do. It's going to go bearish, then bullish, then bearish now, then bullish back up again, come back down to support, and then rally back up again. And then long term, we bearish again on this. So pound Aussie, in the short term, I'm thinking bearish in the short term. Look for some downside move as we break through 157. Then when we break through 157, we're going to come back up again, retest that, break through 157, and we're going to trade higher, and then long term, a bearish move. Now, if I look at target trading again, check out the confirmation we've got here as well. Now on the, this is the chart right here, Aussie up here on the top right here. Take a look right here. Here's the target, 179.61. So traders, once again, this market will gravitate towards that level. First dipping, we're going to first see a bearish move, short term, then we see a midterm rally, and then a further downside move to the downside. So look here, we've got a basket of currency pairs, well, at least a basket of the pound pairs that are showing different directions really in the short term. Although in the long term, based on fundamental announcements, we're expecting pound to weaken because of Brexit. All right, we're expecting really to see a pound weakness take place. But that is long term. In the short term, we've got to realize that because we're trading with two currency pairs, we're trading against pound, against Aussie or dollar or New Zealand, whatever it is, but because we're trading with a second currency, we have to realize that there's going to be fluctuation with that particular pair because there's obviously influence in that country. So if we look at, for instance, the Aussie Aussie wants to weaken their currency, so they're looking to cut rates. If they cut rates, we're going to see some further weakness with Aussie. What is that going to mean for the pound Aussie? It's going to mean rally. So pound Aussie will rally once we start seeing them cut rates in Australia. New Zealand dollar, the same thing. They're looking to cut rates in New Zealand. They want a weaker currency. What's that going to do with the pound New Zealand? It's going to rally the pound New Zealand. We're having trouble with, of course, Brexit. With the issues with regards to Brexit, we've seen a weaker pound. So what's that going to do? It's going to try and force the pound down. So the question here is, which one's going to be weaker? Because it's really a race to the bottom. My idea is, or at least my philosophy and trading approach would be, is look at the short term. We know the long-term outlook, but look at the short term. Use the short-term indicators, which is your weekly time frame, trading off the lower time frame. Use that as a guideline to trade in that direction in the short term. And if we start hitting resistance, then now we're starting to set ourselves up for the long-term dip on the pound. So pound is definitely going bearish, but in the short term right now, let's take advantage of the short-term moves, whether it's bullish or bearish, and then we'll take a look at the long term once that takes place. Traders, thanks for your time. Appreciate it. Have a great weekend. This is the FX Big Dog signing off.